There you go. That's a short. I've got my signal. Are you going to rewatch? No, I can recap. It's not a big deal. Basically what I've been saying is that based on this corrective timing, we've come in quite nicely into the right place in terms of fib time. And if that's the WXY, then we've kind of come into the right place for the price to now go upwards. The good thing about this point is that bulls and bears are buying at the same time. Okay, so that's why this is quite an interesting area. You've got confluence of action between the bulls and the bears, because the bulls will be buying for continued correction, which will be the continued idea that I've mapped out, which is a WXY and a higher time frame, which is what you're saying. You're saying bear sideways frustrating until the US election. Effectively, that's what this is. Okay, some kind of sideways correction. It's still some kind of zigzag, but it's like a higher time frame zigzag. And we would have completed the first part here. Then you'll be looking for the next move. So that's the first part. The next move would be that way, and then you'd have the last move, which would be something like that downwards. Okay, that would be a zigzag. And then the bulls will be looking for some kind of impulse out of here, because the bulls will be thinking to themselves, correction over, let's buy. And so the question now is, how do we come out of here? Do we impulse out of here, or do we ABC out of here? Okay, if we impulse, that I think the timings are going to be different to an ABC, because in ABC I think the timings are just going to correlate with what we've already experienced. I don't see any reason why the correction timing should change if the correction continues. Yeah, it'll probably just continue like this on time, and it'll do ABCs, 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 ABCs until it completes the higher time frame X of the WXY. Okay, that would basically correspond to your idea, which is a prolonged corrective price action through to the US election. This is taking us roughly to about the end of September, beginning of October. Okay, although I think the election's in November, isn't it? So I don't know. Okay, that being said, if we impulse now, there's nothing you or I or anyone can do for that. Yeah, and the only way to know is if we count 5 waves and 5 impulsive waves, and actually you'd want to take out the all-time high and continue. So no one really knows whether we're going to have a final wave now, which is an impulsive wave, or we're going to continue this correction. If we do continue this correction, then you'd pretty much expect it to mimic the first part of the correction, right? Because the idea is WXY. It's a combination of WXYs, which is a combination of ABCs. Yeah, so you would expect the timings and everything to be in tune with the first part. And so that's how we're going to know. Yeah, so we just have to follow this now and see how this plays out. I think it's possible, and this is what we have to be aware, keep an eye on. So I mentioned this earlier. I'll just kind of mention it again. I think it's really important now to see if the bulls turn out or not. Okay, so the first thing that I want to see is if they can take out this high, which I think is likely. That will be a 4-hour time frame market structure change to bullish. Okay, if this 4-hour now is bullish, so lower low, higher high, higher low, higher high, if this now becomes bullish, then we should expect a pylon for continuation. Yeah, that's what you expect. Flip that level into support, bulls will come in, turn up and force, higher low, and push the price up. That's what you want to see, right? So that's the first thing I'm looking for, taking out that pivot and to see what the reaction is, to see if the bulls pile on or not. that would also compound with a short squeeze, yeah, because obviously there's a shit ton of shorts in this range. The minute you have a 4-hour time frame bullish market structure confirmed, I wouldn't be surprised if some big shorts close, yeah, because that will be their signal to close. And also what you can see here is a bullish pattern forming, and Adam and Eve is a V shape with a rounding bottom. Okay, so I've kind of I've hinted that there might be a rounding bottom forming here, so I've been kind of like keeping an eye on it. I had two ideas. I had a wider one, and I updated that with a more realistic one. So that was the more realistic one, and then I was looking at something earlier on in the week, a bigger one. Okay, we still might go down to make a higher low, so I don't know. Yeah, I'm not saying we're going to go up. That's an Adam and Eve pattern. If we break that, then you'll have a measured move will take us roughly to these highs here, roughly. Okay. The question for the bulls will be, do they take out the all-time high? That's a really important question, because the bulls have to take out the all-time high. They have to. We've put in a lower low. The bulls have to put in a higher high. Okay. And that's really going to be the next question. If the bulls put in a higher high, yeah, I don't see any reason why we continue this corrective move. I think what will happen is potentially you'll get a bigger impulse to the upside, because then you're putting in a higher high. After you put in a lower low, it's basically the same as this. That was your lower low. See that? And the bulls were able to take it all the way up to a higher high. Little back test. And look what happened. Expansion. Okay. So there's no reason why you would expect the price to suddenly put in a higher high and to come down if that's confirmation of bullish market structure after putting in a lower low, which was what the bears needs to do. It's basically invalidating a bearish attempt at changing market structure. That's extremely bullish, because the bulls have taken it from a lower low all the way up to a higher high. Effectively, that's a V shape with continuation. The neckline was not tested because it was so bullish, and the price just exploded. Yeah, that's a V-shaped recovery. There's different types of V shapes. That's a V shape. Usually you would expect the price to go up, come back down to go up, but here it was so bullish that the price wasn't able to come back down. Okay, so we have to keep an eye on these things that I'm highlighting. Do we take out the 4-hour high here to put in a higher high here? Do we get an impulse to push us to the all-time high? And then do we flip the all-time high for some kind of support for continuation? It's a very different situation here to here, because here there really was a V shape. Yeah, that's a V. I'm not seeing that V here. So obviously if we go up, it's not going to be exactly the same as this. It'll be very different. Yeah, there's quite a lot of trap liquidity in this range, and this is different because this actually went out to clear the liquidity from the highs. It was a failed auction which led to a V. Okay, we haven't actually experienced that. If this price action had gone up to do that, then maybe we'd be seeing something similar. Okay, so it's slightly different, and so you can't expect exactly the same. And so we just have to keep an eye on it to see what happens. All right. So I think for the next, I think people should be buying now. Like honestly, obviously not into resistance because you see we have a reaction, but I think bulls and bears are going to be buying now. Bulls are looking for an impulse. Bears are looking for an A corrective move to the upside. Yeah. So it makes perfect sense to be buying, and then it's quite easy now to see, because if the correction continues, yeah, let's just assume for the sake of argument that correction continues, that there is no bullish impulse and that Cactus Cake is absolutely right. This was the first fib time. Let me pull it up. Yeah. WXY. So I think the next W is going to be around, in and around the 4th of June. All right. So from here, from where we are now, 15th of May to the 4th of June, I'll be expecting the general direction of traffic to be up. I think it'll be better to buy. Yeah. Then when we get into this next corrective, it will either go sideways or it will be a sell. But remember, look, this sideways correction was a buy. But look how crazy it went. It went up and then it went down and it went up. So you could have exactly the same behavior. It might be a sell, but it could be like this. You know, no one really knows how this is going to play out. If it mimics that, you know, this is a buy, but look, it went all the way down. It's not easy. And naturally, what I'll be looking for is to count the lows to the highs to the lows. That will be my A, B, C. I'll still be expecting that to continue. So I'll be starting off from this low here, not from this one here. I'll be starting it from here because that's on fib time. I'll be looking to see where we end. Maybe by the 4th of June, if we don't impulse, then I would be saying, Cactus Cake, you're right. Correction continues. Yeah. So we have plenty of time to know. If there's going to be an impulse, we'll know. Yeah. Before the 4th of June, we're not going to be within the range. If we impulse out of this by the 4th of June, we're going to be in price discovery. So that's going to be how we know whether we're still in the range by the 4th of June. Yeah. Or whether we're in price discovery. Because if we have an impulse now, we're going to be impulsing. Yeah. We're going to be really going up really fast. Right. So that's how we're going to know. And then when that happens, that'd be amazing if that happens. I can't lie. I'll be pretty happy if we get an impulsive move to the upside. But then the problem with an impulsive move to the upside is you complete your macro 3 correction. Okay. That's the problem. And obviously it doesn't matter because you're going up really high. But it can be problematic because once you complete your macro correction, your 3, let me just kind of game theory it. Let me just hold on. Let me just hide this. So that's your 1, 2, 3, 4, 5. Somewhere up there. Okay. And so therefore you have your 1, 2, 3. Now, the problem with this, and I just want people to be aware of this, the problem with going up to 5 now is that this correction here, so this is the 1, this is the 2, and potentially this is the 3 all the way up to the 5. Then you have a 4 correction. Because this 2 here was an extended flat, this is flat, it's an extended flat. It's very likely, more likely than not, in the same way that we're having a zigzag here, we'll end up with a higher time frame zigzag up there. Yeah, you end up there up at 5 somewhere in June, and then you end up with a higher time frame zigzag. Yeah, and not to alarm people, but the top of 1 was here at about 31, 32k. And when you complete your 3, the 4 correction can come all the way down to the top of 1 without invalidating the Elliott wave count. And because we've already had our flat correction, it's very possible that we have a very deep zigzag. So we've had a deep zigzag here, even though people think it was flat, it wasn't flat. This is a deep zigzag. And so if we have a much higher time frame deep zigzag, that's gonna it's gonna cause a lot of problems for people if they're bullish. Yeah. And you would expect that correction to kind of match the timings of this correction here. So how long did this last? Roughly, what comes to this, 370 bars. If you get up to there in June, mid-June, 370 bars would take us to January. Yeah. So can you imagine if we get up there to June and then we just have a really deep zigzag all the way down to January like that? Now, I'm not saying it's going to go down to 33, but that would be correct. Yeah. So potentially you're right. If we go up now, it's going to be even more bearish, because then you'll end up with a really deep zigzag that leads all the way through to January. Yeah. Or if you have a more kind of prolonged corrective summer to November, then actually that could be more bullish for us. Yeah. If we end up at 52 by the end of October, yeah, and then we have a bullish impulse, wave 5. No, it won't go up there. That'll be a zigzag. Maybe it'll be a short zigzag for continuation in price discovery. I don't know. So it's just like different ideas that I'm thinking about. But I think in the short term, we just let's see what happens in the next few weeks, right? That's kind of where I'm at now. Whether we have a continued correction or whether we have an impulse, we just have to see. Okay, just have to see what happens. Getting a little bit of reaction from my area of resistance. We're still in this this higher range, so that's good. As long as we hold this range, that'll be good. Maybe the CPI will get a little dump before we get a pump. Okay, that's kind of what I'm imagining right now. A little potentially for the CPI, a little dump before we get a little bit of a pump. That's BTC. Any questions on Bitcoin? Are we all clear?